Hi, it's Mary Bartos with the Bartos Group of Premier Plus Realty, and it is November 2020, and delighted to do another episode of our housing update with my co-host. She's moved to a co-host because we have her on every month. Cheryl Stokes from New American Funding. Good morning, Cheryl.
Good morning. How are you today?
I'm good, thank you. We've come through a lot of things, and we do have some questions. We sent some questions out to some of our folks, so we'll get to those in a minute. But without further ado, why don't we just jump in? I'm going to share our screen here and get us to the housing update. There we go. And with that, talk about what's happening in housing in November. So, Cheryl, a lot of things have happened in November. Obviously, as we well know, things like the election, that's on folks' mind of what's happening. We've got, COVID kind of coming back around, unfortunately, with more positives. But really, what are the analysts saying, and what are they talking about, here in the month of November? Well, one of the ways that we measure, and we've talked about this before, Cheryl, as you well know, months of inventory of home sales or for sale, right? And these are the last 12 months. Now, as we've mentioned many a time, Keeping Current Matters is one of the analysts that I personally listen to. And this is their chart for the last 12 months of annual inventory, or I should say national inventory, across the nation here in the US of homes for sale. And Cheryl, this is interesting because in May, as we were in the middle of this health crisis, we had lots of inventory, but look what has happened nationally with their numbers in September.
Yep, it has steadily trended downward.
Incredibly. To the point where many of our buyers are struggling to find what they're looking for. So we know if we have low inventory, from a standpoint, and there's a price with low inventory, the next trigger that's going to go up is with no new inventory will be price. So, which is interesting because that's what they're saying. And again, Keeping Current Matters used this example or this quote from Chief Product Officer at Tom Data Solutions. Home prices and seller profits across the nation continue racking up new highs as the housing market remains relatively immune from the economic havoc caused by coronavirus pandemic. It's almost as if the housing market and the overall economy are operating in two different worlds. Cheryl, what do you think of that?
I think it's absolutely true, and it's something that we've been saying now over the last several months. We weren't sure what would happen back in March, April, May, and how things would work out. But the housing market has remained strong. There's a huge demand for property in our area, and it really is operating on a separate track than the rest of the economy.
Yeah, for sure. And the economy is doing fairly well, obviously, in certain things, but it's like we're in two different worlds, definitely, for here.
It hasn't stopped anyone from buying or selling.
No, not at all. Now, a little bit of a pause on the selling side, and quite honestly, I think that has more to do with where are they going to go, what are they going to do, what do their dreams look like, at least in our area, right?
Yep.
More so than necessarily what are they going to get out of their house from that perspective.
Correct.
Stops a lot of folks. One of our colleagues up in Atlanta, shout out to Glenda Baker. She just was on a housing update with our chief coach, Tom Ferry organization, and she was talking about her market. Very different in the fact that if you're working for Delta or Marriott or some large company and they've laid you off, for you to sell and then buy is a little bit problematic, right?
Right. Because you don't know what your future holds. Correct.
Exactly. You know that you're going to get a job, but right now it's hard to get a mortgage without a job.
Exactly.
Right? Unless you're retired.
On that.
You do. For most of us, we do need a job.
Yes.
So to me, that's very different than our market sitting here, in Southwest Florida, which is, second home, or, we do have a lot of tourism, and our tourism has been hit with, unfortunately, with our, restaurants and our hotels, et cetera. But we seem to be a little bit more insulated, and definitely our market is more insulated.
Yep.
Which leads us to the next thought of, what Josh Zumbran is saying, the Wall Street Journal national economist, our economics correspondent. He said, news stories often describe the coronavirus-induced global economic downturn as the worst since the Great Depression. Yet, for many, the comparison does more to terrify than clarify. Cheryl, what are your thoughts on that?
I think that's true. I think you have to really do your research. If housing is something you need to know about right now, if you need to buy or you need to sell, you can't look at the news stories globally because it doesn't track through to our region and what is affecting our region here. So you really need to talk to the experts to clarify what's happening in your area.
So true. And not only that, but kind of looking at the information. My parents, were older when they had me because I'm a little younger, but
we're very young.
Just saying. Anyway, they lived through the Great Depression. They weren't, old enough to have jobs, but they lived through it with 108 months of unemployment of equal to 9% or more.
Yep.
And you look at that, and we did live through the Great Recession and the 80s oil recession,
yep.
Cheryl, but the 2020 recession, again, 1% unemployed is horrible. But, to have only 4 months of people unemployment greater than 9%, when you look at that, we're nowhere comparison to the Great Depression.
Right. And let's hope it stays that way. I think, hopefully we're coming out of it. But right now there's nothing to compare.
Yeah, agreed. So that terrify versus clarify in this case definitely applies. Now, this is your bailiwick, Cheryl. Mortgage rates continue to trend down. Talk a little bit about that.
They are continuing to trend down. I would always, and again, I always say check in your area. I would clarify that when you see rates like this, an average of 2.8, to remember that rates vary by region. So they are historically low. We anticipate that they're going to stay historically low, but always take what you're seeing in an advertisement or a broad average such as this, and make sure that you're doing your research with a local lender to find out what rates are doing in your region.
Yeah, so smart. So smart, because what we do know is they are down.
Absolutely.
But there's a whole bunch of different products, right, Cheryl?
There are different products and different buyers and different properties, and all of those go into your rate assessment.
Well said. That's your bailiwick. Do you agree? Again, Keeping Current Matters has predicted this chart that over the next 3 years that we'll see maybe a 1% increase.
I think that's probably pretty close. There's a lot of varying opinions on that, but like we talked about last month, we put out some information regarding interest rates in election years. And honestly, there was very little effect from election year to election year. So I think this is probably a pretty reasonable chart.
Yeah. And it didn't matter, right, Cheryl, who won. If your flavor of the party won versus not, and Cheryl and I are not political on this, we're not saying that. It didn't matter. It didn't really.
There was very little difference from election year to election year over the last many presidential election years. There's always a little blip, but it goes right back to approximately where it was to begin with.
Yeah, for sure. And again, Cheryl and I remind us again, Cheryl, because I'll remind you of mine. What was your first interest rate on your first home you bought? Do you remember?
I do. I had a 13.5% negative amortization loan. When we sold 10 years later, we owed more than we borrowed. Yep. 1980.
Yeah, right. That was just crazy. I think my first house was in 86 and I was somewhere in that 14%.
Yep.
And I didn't put that much down because I didn't have that much money. But at the end of the day, it was crazy when you think through that.
Even just a short time ago, remember, not that long ago, 2012, 13, it was 7% in that range. So, I mean, we're less than half of that now.
Unbelievable. Which kind of leads us to the next slide. Again, these are relative, right? And
right. The rates are relative.
Is relative. But talk about that, these increases for somebody that's looking at a, first time home.
Yeah, a half a point makes a big difference. And if you can get in while it's still low, that's going to make a difference long term in building wealth for your family through home ownership. So the sooner you can get in at a lower rate, the better.
Right. So rates is just one piece of this whole puzzle. The next piece of the puzzle, right? The next piece of the puzzle is the projection on home price appreciation. Now, these are 3, 6, 7, 8 analysts, chief economic from Zillow, economists from Zillow, all the way down to CoreLogic, have given their predictions on next 12 months and what's going to happen with home prices.
Right. You've got a pretty wide range there. But if you choose the one right in the middle from NAR, that's a pretty healthy appreciation for anybody.
Without a doubt. Now, because Cheryl, my math skills, my arithmetic skills are challenged at best, I'm going to use easy math. If I'm buying $1 million home, what am I going to see? I'm going to see $47,000 an increase just by buying a home. If I use the National Association of Realtors.
Yes.
Right? And half of that if it's a $500,000 home. So regardless of what it is, the point is that better to jump now than in the future. Because we know prices are going to go up. We have low inventory. That trigger is going to be price because the demand is there. We've been pretty much insulated through the health crisis. Come from May all the way to now, we're consistently selling. I've got a chart in here in just a minute to show you about that. But if you look at what's happening in our area, and if you recall the first slide that we started this with, nationally, they hit a peak of about 4.8%.
Yep.
Which, if you look at this, neutral market is somewhere between 6 and 7 months of inventory. Now, they were at 4.8 months. Let's talk about that for a minute. Where have we been? What are we looking at? Because I would submit we've been in a buyer's market for a very long time, and now we're flipping into a seller's market. And when you look at that, and you look at these just a year ago, 7.5, 8 in February, all the way down to, oh my goodness, at 3.8 months of inventory in October.
Yep.
That is amazing.
Right. That's below that 4% range. And as you know, just with your clients, I know with my clients that are out there shopping, they are not finding what they're looking for. And there's multiple offers when they do find it.
If it's priced well, it will sell. And it will sell, quickly for top dollar. So, again, and I say that to my folks out there that, and I'll use it again for easy math, stupid, simple example. If the house is worth $1, no one's house is worth $1, and we're trying to market it for $100 million, it's not going to sell because there's no value to that. But if we're in the range and that sweet spot of the market value, it will sell, and it will sell fairly quickly because in 3.8 months, that's all the inventory we have, which is rather interesting.
Right.
Now, Cheryl, we've also used this slide in the past, right? We're in a historic seller's market. We're hitting the trifecta, that historic low interest rates with low inventory, and then people moving into our market, just, was it last month, Cheryl, that the Times wrote that article?
Yep.
950 people a day moving in their area to Florida. There are more than that. But that trifecta puts us in a sweet historic seller's market.
I think so. And I think we see that every day with our clients that we're working with.
Demand, low inventory. So before we open it up to the questions that we've had out there, we always leave this with, is it time to move? Well, we can't really answer that for you, but what we can do is we can go back to the point of, we do think it's time to move, right?
Yes, I think if you're in a situation where your future is secure, I mean, we know there are people out there that it's not, but if your future is secure and you believe that it's time to move on to another property, whether you're upsizing or downsizing, now is the time to do it for both sellers and buyers. Buyers need to get in with the historically low rates. Sellers should sell while it's a seller's market. So I think it's a good time for both sides if all the things are falling into place for you economically to do so. And Absolutely. Here in Southwest Florida, it seems to be a very hot market, and we seem to have both buyers and sellers who are prepared to do so.
Absolutely. Now, one of the questions we had that came across, because we sent this out to our database, what questions would they like to ask us? And I'm asking you off the cuff. I didn't prepare you on purpose.
Okay.
She breathes. Oh no. Okay. What is she doing to me? Question to you is, what do we think the election has done to our market?
Nothing.
Correct.
I don't think it's done anything. I think the same people who were considering moving 3 weeks ago are still considering moving, whether they're moving to Florida or whether it's someone who already lives in Florida who's looking at their next home. Maybe you were a first-time home buyer, but your family's growing and it's time to move up to a larger home. I don't think anything in the market has really been affected by the election at all.
I agree. Interest rates are trumping that. Getting to that warm place, living out your dreams, getting out of wherever you were because of you didn't want to be locked down and you want to change that, is still driving the buyer demand high. Would you agree?
It is, and it's a great advantage for everybody. I mean, the whole spectrum of buyer, whether you are a buyer who's going to buy $1 million+ property on Marco Island and it's your second home and it's your dream home and someday it'll be your retirement home. The rates are advantageous. If you're a first-time buyer and you've never owned and maybe you couldn't earlier because your debt to income was too high, this provides maybe another opportunity to do so. If you're a retired buyer and you're downsizing and you're on fixed income, now's the time because the rates are lower and that same person maybe would not have been able to do it a year ago. So It really hits all levels of every buyer. The question is can they find the property?
Yes, that is a question. Can they find a property? Let's talk about that a little bit further. What about all these states that have super high, fees? We don't have a state income tax. So that's fabulous, one. And two, our property taxes are really relatively low. So
in comparison to a lot of places, yes.
Right? We're about, in Collier County, we're about 1% effective tax rate. I'm not an accountant, so don't trust me, but don't use my math on your tax returns. But again, simple math, whether you do 500,000 or $1 million, and because I like simple math, $1 million is, $10,000. When I look at that same $1 million house in some other states that tend to move here, and you know who you are, that's usually $25,000 or maybe even $30,000 in property tax, which is crazy, right?
Yep.
We did just in the Really Merry show that I do every week. I just had one of our tax advisors on, and he was talking about that as well as homesteading. So the benefits of homesteading here in Florida, benefits that you can get as well. So, from that perspective, I think taxes are huge. My question I got, we're getting with our agents, my candidate of choice didn't win. Now, again, this is not a political statement, and I have to wait and see. We've heard that through every market, have we not, Cheryl? Like, when Obama was elected, when Trump was elected, whoever it is, whichever flavor it is, I have to wait and see. What do you think about that? Do you think that is something that's real?
I think there are some people who are saying, I want to wait and see. I actually heard that once this week. But for the most part, if your clients are really looking at the bigger picture, nothing in the big picture has changed.
Yeah.
So there are some people who, no matter what, that's how they're going to feel, and they're going to wait and see. But if you can present what is really going on, if you're clarifying what's going on in your region, then I think they'll find that nothing has changed. The opportunities are still there. Nothing has changed in the broad arena to be a determining factor in that decision.
I couldn't agree more. At the end of the day, what we've seen historically is, we saw it in the last two major elections when I've had people say, I'm not going to do anything unless so-and-so gets involved or elected. And so-and-so did or did not get elected, and market took off.
You may miss an opportunity. Correct.
Yeah.
Correct. You may be looking way too globally and not narrowing down to what you're really trying to do, and is there really a plus or a minus effect?
Yeah. Cheryl, any other thoughts that you have that you're hearing that you want to stump the chump on?
I'm not sure. I mean, honestly, my only thought is you really do have to go ahead and jump in. That's the thing that I'm seeing with my clients over and over. If they don't jump fast enough, they're missing out on an opportunity. And then it takes a long time to find the next one, because it is such a highly charged market here right now. So they miss out on one and they don't find one the next day. It's sometimes weeks.
And talk about how to prepare, just, because you're spot on. If you don't have cash ready to jump today and no contingencies, then how can we prepare for that?
Then you need to get yourself pre-approved and prepared for what a mortgage really looks like now, because we are still dealing with guidelines that have to do with COVID-19. We as lenders, no matter what, have to follow whatever the Fannie Mae and Freddie Mac guidelines are at this moment in time. So you need to get with a lender and provide all your documents. You need your bank statements. You need your income, whether it's W-2, if you're self-employed. We need all of your documents. We need to show that you've got the cash to close available. And if you don't, where are you going to get it? How are you going to get it? And can we document it? You really just need to thoroughly work with a lender and make sure that when you do find that place and you pull the trigger, your whole file is set and ready to go. There aren't going to be any delays, because the offers, the contracts I'm seeing are much more competitive as well. They want shorter financing contingencies. They want shorter turnaround, but we have to have more documentation than normal. Appraisers are really busy, so they're taking longer. So you really need to have your ducks in a row with your lender, so that as those other outside forces cause delay, everything else is prepared and ready to go.
Closing agents are taking longer. They have more files. They're trying to get through it all.
Everybody's buried.
Yeah, in our market. So
yes.
I would wholeheartedly agree with Cheryl that if you're looking to buy in this market, then you really need to get with, Cheryl, a lender, really go down that path of being prepared, because you don't want to lose out on that home that you love. Secondly, if you're looking to sell, time is now. Don't wait. I can't stress that enough. With 3.8 months of inventory, everyone is trying to shake it out. Agents like our team, the Bartos Group and beyond, are all having these conversations with people to see if they've thought about moving. Now is the time. It is the
Yep.
time to get your home on the market and get it priced properly. At the end of the day, if the market, again, there's good and bad agents out there, but I can tell you on our team that if we have it priced properly, it will sell, and it will sell quickly. If we have a pricing issue and the market rejects it, it's a totally different thing, but that's something that we can walk through in a more detailed analysis. But get it on the market, right?
Yep, I totally agree.
Well, Cheryl, we've come to our end, another episode of our housing update in November. Again, I'm Mary Bartos with the Bartos Group of Premier Plus Realty, and with me I have Cheryl Stokes with New American Funding, and it is our pleasure to talk with you this month, and we'll talk to you again in December. Ciao.
Ciao.